Let's break down what happened with Opendoor stock today, because Wednesday was another fascinating chapter in what's becoming one of the most closely watched tickers on the market. The day started rough. Opendoor opened significantly lower and dipped dangerously close to the $2 flat mark. We're talking about a steep early session decline that gave off the appearance of a panic sell or even automated profit-taking by swing traders and short-term holders. It shook some people, and you could feel the anxiety ripple through the retail forums in the early hours. But here's where things get interesting. Instead of completely collapsing, the stock found a floor. Around the $2.20 range, there was a visible uptick in support, and volume started to stabilize. And from that point, we saw a sustained upward push that carried right through to the close. The session ended back at approximately $2.29, the same price as Tuesday's close. That's a huge statement about underlying strength, especially considering the early damage. This wasn't just random noise. When you combine this price action with what's being said on Reddit, Stocktwits, and other retail investing spaces, you start to see a clear pattern. There's conviction in this rally. Retail traders, particularly those who've been following this meme resurgence story, are sticking with their positions. A lot of them even doubled down during the dip, myself included. And this brings us back to the looming reverse stock split vote scheduled for Monday. Let's be honest, this has been the center of the conversation for a while now, but with each passing day, it looks more and more like it could become a non-event. Here's why. The stock is already trading above the $1 compliance threshold for Nasdaq. That means the original urgency behind the reverse split, to stay listed, has more or less faded. It's no longer a necessity, and I think the board knows that. The best-case scenario would be for the vote to be cancelled or delayed, sending a signal to the market that the board respects the strength of this rally and sees no immediate need to interfere. That would light a fire under this thing. But even if the vote proceeds and shareholders vote no, that's still a solid result. It shows resistance to unnecessary dilution and reinforces confidence in the current price movement. If the vote is yes but the board chooses not to enact the reverse split right away, I think that's the most likely and most politically savvy move. It gives them flexibility if needed later, but it also gives this rally room to breathe. It's a cautious nod to retail investors without tying the board's hands. Now of course, if they do go through with a reverse split in the face of all this momentum, that could sour sentiment quickly. It would likely spark another wave of volatility and possibly drive some retail traders away. And in this kind of store-driven run, sentiment is everything. But here's the bigger picture that I think is now becoming even more important than the vote, and that's the housing market itself. We've started to see early signs that housing market conditions are improving, whether it's declining mortgage rates on the horizon, a slight easing of inflation pressure, or just better consumer confidence about home buying. And let's not forget, Opendoor is a pure play on housing. If conditions improve meaningfully, they're going to feel the tailwinds hard. That brings us to the August earnings release, which is now shaping up to be a major catalyst. A good earnings report, or even a forward-looking statement that shows Opendoor is navigating the macro landscape better than expected, could push this stock much higher. And remember, earlier this week we almost hit $5. That's not just a random spike. That shows the kind of explosive upside this stock has when retail interest and momentum align. So heading into Thursday and Friday, here's where I stand, still bullish, still confident, but increasingly patient. This isn't a flash-in-the-pan meme play. This is a volatile but potentially powerful turnaround story that's still unfolding. Let's see what the rest of the week brings. Keep your eyes on the volume, keep your ears on the boardroom, and stay focused on that August earnings report. We're just getting started.